Welcome to Portfolio Casts, the podcast where we break down real investor portfolios using publicly available data.
In this episode, we're analyzing Guy Spier from Aquamarine Capital, based on the latest reported 13F filing, exploring the key holdings, portfolio concentration, and what the positioning might tell us about their thinking.
Guy Spier is the ultimate disciple of Warren Buffett. He literally wrote the book on value investing after paying over $600,000 just to have lunch with the Oracle of Omaha. But Mike, when I look at his latest filings for Aquamarine Capital, I'm seeing some moves that feel like a massive shift in strategy. His portfolio is sitting at about $145.3 million right now. The headline today is a shocking daily drop. The data shows a daily change of negative 483%. That has to be a reporting anomaly or a massive structural shift, right?
It certainly catches the eye, Sarah. Even with an overall portfolio loss of 1.5%, that daily volatility is staggering. Spier is known for his coffee can approach. He usually buys high-quality businesses and forgets about them for decades. But the recent activity shows he's been very busy with his scissors. His largest holding is still Berkshire Hathaway Class B shares. It makes up 33.3% of the entire fund. That is a $47.2 million position. But here is the kicker. He just reduced that position by over 30%.
That is a huge reduction for a man who considers Buffett his mentor. Berkshire Class B is trading around $483.83 right now. We are seeing a price-to-earnings ratio of 15.5. That doesn't exactly scream overvalued for a company with that much cash. Why would he trim 30% of his core conviction?
It might be tied to the news headlines we're seeing. There's a lot of talk about Berkshire Hathaway being at the end of an era following Charlie Munger's passing. Spier was incredibly close to that philosophy. The Class B shares have a 52-week range between $682,000 and $812,000 for the A shares, but the B shares are the liquid entry point. Even with the trim, he still holds 97,600 shares. He's taking some chips off the table. It's a defensive move.
He's also been trimming American Express. This one actually shocked me more than Berkshire. He reduced his American Express position by 69%. That is almost 70% of the holding gone in a single quarter.
It's a massive liquidation. American Express is now 16.3% of the portfolio. That is worth about $23.3 million. The stock is trading at $359.61. If you look at the fundamentals, the P/E ratio is sitting at 23.6. That is significantly higher than Berkshire's valuation. Maybe Spier feels the easy money has been made here.
American Express has had a great run. The 52-week range is between $220 and $387. It's trading near the top of that range. Do you think the 0.93% dividend yield just wasn't enough to keep him interested?
For a value investor like Spier, it's always about the margin of safety. When a stock climbs toward the top of its 52-week range and the P/E expands to 23, the margin of safety thins out. He still holds 65,000 shares. So, he hasn't abandoned the ship entirely. He's just lightening the load significantly. It's interesting because American Express actually saw a daily gain of over 2% today. He might be missing out on some short-term momentum, but Spier doesn't care about momentum.
Let's look at the third pillar of this portfolio. He holds Berkshire Hathaway Class A shares as well. This is 15.3% of his total allocation. This position is worth $21.7 million. Unlike the Class B shares, he didn't touch these. He held steady with exactly 30 shares.
Those Class A shares are the ultimate status symbol in value investing. They are trading at $724,079 per share. Think about that. One single share costs more than most luxury homes. The earnings per share on these is over $46,000. By keeping the A shares but selling the B shares, he is maintaining his seat at the table.
It feels like a psychological distinction. The B shares are for liquidity and rebalancing. The A shares are the permanent foundation. But even with that foundation, the overall gain on this position is down 4.1%. The Berkshire news about the end of an era seems to be weighing on the sentiment.
It's a transition period for the company and for Spier. He's managing $145 million, which is a lot, but he treats it with the care of a much larger fund. When he trims 30% of his Berkshire.B and nearly 70% of American Express, he is building a massive cash pile.
He's waiting for a fat pitch. That's the Buffett way. He sees the market as potentially overheated. If he's selling his favorites, he's worried about valuations across the board. The American Express PE of 23.6 is clearly a sticking point when his average overall loss is 1.5%. He's trying to protect the downside.
Exactly. He's looking at a portfolio that is heavily concentrated. These top three holdings, alone the two classes of Berkshire and American Express, account for nearly 65% of his entire net worth. That is extreme concentration. When you are that concentrated, you have to be right. Trimming the B shares and American Express suggests he's a little less certain about the immediate future of the U.S. consumer in the post-Munger era.
It's a bold move for a man known for his patience. He's literally known for not checking his stock prices. But a 69% reduction in American Express is not a passive move. That is a loud, clear statement about where he thinks the market is headed. So, Mike, we just talked about Guy Spier's deep roots in the Buffett philosophy. But when I look at his current holdings in Aquamarine Capital, one name really jumps out because of the sheer size. Mastercard. It makes up 15.5% of the entire portfolio.
It is a massive cornerstone for him, Sarah. Right now, he is holding 40,000 shares. That position is worth over $21 million. But what's really interesting is the recent activity. He actually reduced this position by nearly 40% recently.
40%? That feels like a huge move for a guy who preached the education of a value investor. Why trim such a high-quality business now?
Well, looking at the fundamentals, Mastercard is trading at $527.57. The price-to-earnings ratio is sitting at 34. That is not exactly cheap. He might be looking at the recent news comparing Visa and Mastercard. Analysts are debating which payments giant looks more attractive in this high-interest rate environment.
The stock is down about 0.8% today. And overall, he's down 7.6% on this position. Do you think the valuation caught up with the growth?
It's possible. The 52-week range is between $465 and $601. He is right in the middle of that. Even with his small dividend yield of 0.65%, Spier might feel the capital could be deployed better elsewhere. Or he's simply rebalancing after a long run.
Speaking of long runs, let's talk about Moody's Corporation. This is another classic moat business. It's about 9.3% of his total value.
I love the Moody's play for a value guy. He holds 27,000 shares worth about $14.1 million. The current price is $524.82. Unlike Mastercard, he didn't touch this one recently. No changes at all.
It's up 1.5% today. And he's actually in the green here, up about 2.7% overall. But that price-to-earnings ratio is even higher than Mastercard. It's at 42.8. Is that a concern?
For many, yes. But Moody's is a toll booth business. They have an incredible competitive advantage in credit ratings. Recent news mentions that cautious consumers shunned big-ticket items last year. That affects debt issuance. However, their earnings per share still sits at $12.44. It's a cash cow.
Let's shift gears to something a bit faster. Ferrari. He owns 30,000 shares. But Mike, he cut this position exactly in half.
A 50% reduction is a loud statement. He sold off half his stake, leaving him with about $10.2 million in the stock. Ferrari is trading at $341.68.
He's actually up 7.2% on Ferrari overall. Why sell half of a winning horse?
It could be pure profit-taking. Ferrari has a price-to-earnings ratio of 35. It's performed well, but the 52-week high was nearly $500. It has pulled back significantly from those levels.
There's news that 25 could be a pivotal, resurgent year for U.S. equities. Maybe he's raising cash to prepare for that?
That's the Spier way. He's patient. He waits for the fat pitch. Even with a 1% dividend, Ferrari is more of a luxury brand play than a traditional car company. He might think the valuation has peaked for this cycle.
We can't talk about Guy Spier without mentioning Daily Journal Corp. This was Charlie Munger's company. Spier has 3.8% of his portfolio here.
This is the star of the show right now, Sarah. He hasn't changed this position. He holds 11,500 shares. And get this, he is up 33.4% on this investment.
Wow. 33% in a portfolio that is down 1.5% overall? That's a huge win.
It really is. The price is $649.96. It's trading right near its 52-week high of $660. But look at the valuation. The price-to-earnings ratio is only 8.
That is incredibly low compared to the 30+ we saw with Mastercard and Ferrari.
It's the definition of under the radar. The earnings per share is a massive $81.40. While everyone is looking at tech, Spier is sitting on this Munger-linked gem that is quietly printing money. It's up over 3% just today.
It's fascinating to see the contrast. You have these high multiple giants like Moody's and then a deep value play like Daily Journal.
It shows his range. He isn't dogmatic. He wants quality, but he also wants a margin of safety.
Looking at the big picture, the Aquamarine Capital portfolio is worth $145.3 million. Today was a rough one, though. The data shows a daily change of negative 483%. Mike, that has to be a data glitch or a massive shift in underlying reporting.
It looks like a major reporting adjustment. In reality, his overall gain/loss is only down 1.5%. For a concentrated value investor, that's just a rounding error. He's not looking at today. He's looking at the next decade.
That's the takeaway, isn't it? He trimmed the winners like Ferrari and Mastercard. He's holding steady on the moats like Moody's. And he's reaping the rewards of Daily Journal.
Exactly. He isn't afraid to hold cash or shrink positions when the price isn't right. He learned from the best. He's playing a different game than the day traders.
It's been a masterclass in patience. Thanks for breaking down these numbers with me, Mike.
Always a pleasure, Sarah. It's a fascinating portfolio to watch.
For everyone listening, that wraps up our deep dive into Guy Spier's Aquamarine Capital. Stay disciplined and keep an eye on those margins. We'll see you next time. Thanks for listening to Portfolio Casts.
This content is for educational purposes only and should not be considered financial or investment advice.
Any figures, prices, or portfolio values discussed are approximate, based on public filings and used for illustrative purposes only.
The views expressed are interpretations of public information and may not reflect the investor's current positions.
Follow Portfolio Casts for more investor portfolio breakdowns.